Hi, welcome to this week's Canola PROCAST. I hope you all enjoyed your long weekend. We've come back to a little bit of volatility in our markets, and so we'll talk a little bit about what's driving that here today. Really, it's kind of the same story we've been talking about. Everybody's got their eyes focused on Argentina and how hot and how dry it's been down there. You saw it today, soybean meal and soybeans have rallied very strongly coming out of the long weekend. We just have a dry forecast and it hasn't really changed over the past week. And folks are starting to talk about a crop that a few weeks ago, a couple months ago, was as big as 57, 58 million metric tons. And now most in the market are seeing it as something less than 50 million metric tons. So soybean meal continues to rally and it's dragging beans along with it. So definitely we're getting some support to our canola market from some strength in the soy pits. Oil today is actually up. It seemed to struggle a little bit with the strength in soybean meal, just putting pressure on soybean oil, not needing to be strong from the product side in order to incent a crush margin. But it actually has rebounded here in today's session. And so again, with the strong soybean oil and strong soybean values out there, canola is getting a bit of a lift as well. The next thing to talk about and what's driving our canola market is really the Canadian dollar weakness. So we've just seen continued weakness in the Canadian dollar, strength in the US dollar, and as that happens, canola looks more attractive for export interest, and so you see that price supported in Canadian dollars. If you looked at a canola chart in US dollars today, you'd see that the price really hasn't moved around much and is actually just slightly higher as opposed to being up over $3 in Canadian dollar terms today. So really that's kind of the same story we've been talking about. Most of the market is focused on Argentina weather, and it's going to take a change in the weather pattern, adding some moisture back in there for things to change away from that. Just on the opposite side of that, it's important to note that Brazilian soybean crop is still very big, and often people would say big crops get bigger, so that may be outweighing a lot of the yield loss that we're seeing in Argentina. So important to keep an eye on that. In our cash markets, really things have been pretty quiet. One thing to note is that freight is becoming a bit of an issue for both exporters and crushers. And so that could potentially weigh on some of the cash values out, across Canada as the rail lines struggle to meet the freight obligation or freight requirements of the exporters and crushers. It may impact how much volume we can actually export and how much volume we can actually crush at our facility. So something to keep an eye on as we go forward here. It's been a relatively harsh winter, and rail lines tend to struggle in those kind of situations. So we've gotten a good lift. I think there is still potentially some upside in our soybean markets if Argentina continues to stay dry. At some point, I think the big crops out there will correct that market and we'll see some pressure. But for now, we're riding a bit of a wave, and I think we're moving higher, and it's great for our markets. It's a great opportunity for the farmer to sell at some higher prices, and I think it makes sense to look at engaging, and selling at some of these prices here, because at some point we're due for a correction. Thanks.